This is Sudden Wealth Radio, the first and only broadcast that explores the financial, tax, legal, and psychological issues of sudden wealth. Your host, Robert Pagliarini, is the nation's leading sudden wealth financial advisor who has earned a national reputation for working with clients who have received windfall from inheritance, divorce, lawsuit, business sale, sports entertainment contracts, stock options, and the lottery. You may have seen Robert on Dr. Phil, Good Morning America, 2020, Katie Couric, or others. And now, here's your host of Sudden Wealth Radio, Robert Pagliarini.
Welcome to Sudden Wealth Radio. So today, I'm going to be talking about how to protect your assets. Now, the situation is this. If you don't have assets, then you're probably not at a high risk of being sued. But if you do have some assets, if you came into a windfall, if you're going to come into a windfall, you want to make sure that you protect your assets as much as possible, because the more money you have, the greater you are as a target. So the first thing that you should do is to make sure that you have umbrella liability insurance. So what is umbrella liability insurance? Well, basically, you have auto insurance, you have homeowners insurance, and it provides you a certain level of liability protection in case you're sued. But what happens if you're sued for more than what your auto or your homeowners insurance covers? Well, that's where umbrella liability insurance comes in. It's called umbrella because it sits over and on top of your other policies. I recommend having at least as much umbrella liability insurance as you have in your net worth. So, for example, you might not have much today, but if you know that you're going to be coming into an inheritance, for example, and you think it's going to be about $2 million, well, what you should do is before you get that inheritance, call your insurance company, the one that either provides your auto or your homeowners, and tell them that you want this umbrella liability policy for, I would say, at least $2 million. Because what happens is now, if you're sued, that umbrella liability protection sits over and above all of your assets and can protect you and will pay out up to $2 million of your net worth. So that's the first strategy to protect your assets. The next is to consider keeping your assets separate. So what do I mean by that? Well, in many states, we have what we call community property, and that's what it is in the state of California and several others. What that means is that any property that you own yourself is automatically owned 50% by your spouse. So for a lot of people, that's fine. It's no problem. It's okay. But if you think you are going to be going through a divorce, or for whatever reason your spouse may be sued, you want to make sure that if you are getting an inheritance, for example, that you keep this property and these assets separate, because then they just belong to you and they are not partially owned by your spouse. The next issue is a big one. So I'm very concerned about rental properties. I think they could be great investments if they're handled well. But I see this far too often, and that is people have rental properties and they own them individually. So what does that mean? It means that you own the rental property in your name. That could be a huge problem if, for example, that tenant sues you. So not only are they suing you and this property that you own, but they're basically suing all of your personal assets. The reason is that you own that house personally in your name. So what you want to make sure that you do is that if you have rental property, create some kind of business entity, for example, an LLC, to hold that property. So what happens in that case if you're sued? Well, if the rental house, for example, is owned by this LLC, your tenant then has to sue the LLC. And so while they can attach, is what they call it, the assets that are owned by this LLC, which would be the house, all of your personal assets that are not in this LLC are protected. They're shielded from the lawsuit. If you own multiple rental properties, one strategy is to create an LLC for each rental property. There is another strategy called a series LLC. So these are popular in both Delaware and Nevada. Anyone in any state can create one of these series LLCs in either Delaware or Nevada, and it has some interesting protections. And so we did another episode last week where we talked about what a series LLC is, the advantages, and the possible disadvantages. So if you have multiple rental properties, I would definitely check out that broadcast to learn a little bit more about how a series LLC could benefit you. The next asset protection strategy is to review all of your jointly held accounts. So if you have a joint account at a brokerage firm or at a bank, what happens is that those assets that are in there are owned not only by you, but of course they're owned jointly. They're owned by somebody else. So if that somebody else happens to be sued, then what's going to happen is that that lawsuit is also going to attach whatever assets are owned in that joint account. So your ownership of that account could basically be stripped away. So if you have assets, if you're coming into money, make sure you look at your jointly held accounts, because that is a potential liability. An even greater liability is partnerships that you may have. So there are different types of partnerships. The one that is the most concerning is this general partnership that you often see between two or more people. And what happens here is that maybe you and your buddy decide that you want to start a business. Well, you don't incorporate, you don't form an LLC, you just verbally have this quote-unquote business together. And so because it's you and this other person, it's now considered a partnership. And what can happen is if your buddy is driving, let's say, to meet a client and gets into an accident and then gets sued, well, what the attorneys will argue is that this person, your buddy, was operating in this partnership. And while he was doing this business-related activity, he was involved in a lawsuit. So not only are his assets at risk, but because you have this partnership, your own personal assets are at risk too. So you definitely do not want that situation. That is, I consider partnerships a ticking time bomb. There's a lot of risk associated with them. So if you are going to have some kind of arrangement with somebody to form a business, make sure that you create an LLC or a corporation or some kind of entity to protect your personal assets. The next situation is where you have your own company. This is not a partnership with someone else. It's simply your own business, what they consider a sole proprietorship. So a sole proprietorship is basically you. You've got this business, but you don't have an LLC or you don't have a company to shield your assets. So in this situation, maybe you're driving to go meet with a client and you get into an accident this time, and now all of a sudden you're sued. Well, they're going to come after you and all of your personal assets. If you had an LLC or a corporation, they would sue your corporation, and your personal assets could be protected. So these are 6 strategies that if you have assets or are coming into assets, you definitely want to make sure that you review these. Work with an attorney. There are lots of great attorneys out there that specialize in making sure that your assets are protected. We live in a very contentious and litigious state here in California. And if you have assets, unfortunately, you are at risk just by the nature of having the assets. So regardless of whether you live in California or somewhere else, it takes a long time and it takes a lot of hard work to create wealth. And so the last thing that you want to do is to work all these years and all this time in creating this wealth only to see it suddenly disappear. So work with an attorney, create some of these structures, and protect your assets.
This was Sudden Wealth Radio. If you feel overwhelmed because of a recent windfall or are looking for better strategies to grow your assets, Robert and his firm have developed a national reputation for providing financial planning and investment management to clients globally. They are more than happy to answer any questions, big or small. So, if you have a question about how they work or a question about your own situation, go to www.pacificawealth.com or email Robert directly at robert@pacificawealth.com.